There's a mortgage lie that nobody ever explains. In this video, I want to talk to you about the illusion that we have with a mortgage. So many of you are stuck, you're financially crippled, you're in this illusion, in this world because it's all you know. And honestly, when you hear about another alternative, the first inclination for whatever reason is, this can't be true, or it's not gonna work for me, or it's a scam. But there's an illusion with a mortgage. If you just step back for a moment, you will realize we've been under the same kind of umbrella for so long. You live a life where your parents had a mortgage, their parents had a mortgage, so you must have a mortgage. And the only thing we're taught is to chase the lowest rate. And there's a reason this is being dictated, this is being fed to us by the banking system to benefit the bank, not you and me. So I want you to think about a few questions. What is your biggest financial stressor? Right now, as you're sitting there, what is your biggest financial hurdle in your life? For most people, if you have a mortgage, you're gonna say it's your mortgage. It's that one thing that kind of always hangs over your head that you're like, yeah, but I mean, that's not, it's never been a real reality to pay it off sooner, unless you're gonna do the biweekly payments, the extra payments, the little bit more towards principal. You might pay it off in the 15 to 17 years, but that's 15 to 17 years you're feeling completely strapped and like nothing else is happening. What if you could have freedom during that time? So I talk to clients all the time, they're like, yeah, this mortgage, it really does feel like a death pledge. I'm like, yeah, that's literally what it means, death pledge. So you're stuck in this thing and you don't realize there's other opportunities out there. First, your rate is not what you think it is. And most of us are chasing the wrong goals. The goal becomes, how fast can I pay off my mortgage? So I'll just dump more money into it, where it's trapped and your money's never working for you. You're gaining all this equity and you can't even utilize it. But you know who's utilizing it? The bank. Do you think the bank is thinking of ways to help you? I mean, there's no way the bank goes, let's go ahead and help the consumer. It's not happening. They're thinking of ways to benefit themselves, to take our money, to keep us financially dependent on them. So we want to become independent. We want to break free from these chains and learn that there's another method out there. Guys, what's funny is these loans have been going on for years, since 1980 in Amsterdam, Australia, England, other places. But we don't realize when you hear about something new here, like, well, I would have already heard of that if that's a thing. The bottom line is not every bank offers this. Actually, very few banks offer this. Very few people speak on this because they don't know, and you don't know what you've not been taught. I've been taught this. I've spent hundreds and hundreds of hours in education. I've asked the questions of people before us. I've talked to so many people who are so financially independent, mega wealthy, and they're like, yeah, we've been doing this since 2003. There's alternatives out there. And so much of our education, our team, and our strategy is to help you learn that there is an alternative to your death pledge. So what is your biggest financial stressor if it is a home? And I'm talking about everything outside of spiritual things, family. What is that biggest hurdle? Typically, it's going to be your mortgage. What would you do with a paid off house? Can you stop for a moment and just think about, like, literally imagine, what would it be like if my home was paid off? If I had that extra $1,800 a month, that extra $2,700 a month, that extra $3,500, whatever your mortgage is at this point. Some people are paying $5,000 and $7,000 because they got locked in at a 7% mortgage for 30 years last year, whatever it might be. But could you dream for a moment, what could you do with a paid off home? Our average client literally pays their home off in around 7 years, between 5 and 8 years. I had people at 1.8 recently. I've had people below a year. The most I've really seen is around 12. I like to get every client under 12 to make sure it's actually going to benefit them and they're going to end up paying less interest in the long run. So yes, one of my jobs and our team's job is to make sure you are 100% going to pay less interest, and not only pay less interest, you're going to save bukus of time. I don't know what that word, if you can spell that word out, bukus of time, but you can save a lot of time and buy your time back. Okay, third question. Why do you trust the bank? Simple question. You might go, I don't. Well, you do. I'm just putting it back on you. You probably do because you keep giving them your money every month. You keep sending that monthly mortgage payment. You're like, well, I don't trust them, but I don't know what else to do. That's what this is for. That's why we've created this, is to give you an alternative. Not like, oh, here's another option. This is a better way. It is the better way. It is going to save you money. It is going to save you time. But you get so fixated on the rate. And those are the questions. I'm going to address that later in this video. I want you to understand there's so much more to ask than what is the rate. So why, again, do you trust the bank? Why are you letting the bank have your equity, to take control of your money, to do what's called fractional lending, where you're giving them a certain amount of money while they're lending it out and making extra on it? You could become your own bank and be making money on your equity instead of it sitting there trapped and you feeling like, man, we've been paying the same thing for 14 years and it looks like it's barely moving. It's barely moving because all the interest is front loaded. And with that, let me ask you, do you understand how interest works? And this isn't a condescending question. I mean, most everyone doesn't have a clue how interest works. You just see the rate and you make sure the payment works. Same way with vehicles, right? How many people go in there like, all right, I want a vehicle, but you gotta keep my payment under 500 bucks. You just gave that salesperson to your wallet because they can manipulate and do whatever they want to do to get your payment down to that $500 to make it work for them, but the timeline might go up. So in the same way, we got to make sure we understand how interest works. And do you understand there's a difference between compounding interest and simple interest? With a first lien HELOC, we're talking about simple interest where the interest is recasted daily, every 24 hours. In a mortgage, some people don't like the word compound. Let's not use the word compound, but it is based off of a monthly average after all 12 months, and it's going to recalculate off the month. And also, your payment stays the same. It might not matter that you're paying a little bit more towards principal and a little less interest each month. But guys, I'm telling you, I don't know if you can zoom in, but we're talking like it's moving like this. Right, Tyler, why aren't you moving? I am moving. It's just moving slower than this. Your interest payment it's not going down on the first 15 to 17 years. You're paying a lot of interest and you're not seeing your house come down. And on top of that, your payment hasn't changed. Why has your payment not come down when you've paid more of your house off? So there's a major difference there. So we need to first understand how interest works. So we want to look into this. And so the way we're going to do that is looking at what's called TIP. You need to know what your total interest paid is. So we have to understand total interest paid, TIP. So first, let's overcome the myth while we look at the math. Yeah, we can go ahead and coin that right now. We look at the difference between the myth versus the math. The myth is everyone says just shop for the lowest rate, get that fixed rate. Great. I'm not going to disagree with you. I want the lowest rate. But what does that rate dictate? What is that rate based off of? And if you got a federal prime rate, let's say, I mean, for most people, if you got it in 2020 to 2022, you probably got something under 4%. Some I have clients at 2.25. I've had clients at 3.75, and yes, all of them still became clients, and many of them even have a higher rate right now, but they're paying a ton less in interest because they've now understood, they've overcome the myth. They've overcome this mantra, this mindset of, hey, just get this fixed rate and then take your rest of your money and invest in the stock market or put extra towards principal. There's all these other things out there, and yes, I'd be happy to talk to you about all of them. And I'm not pretending that I know every detail of investing, but I'm telling you, I know every detail of first lien HELOC. So I'd be happy to have that conversation with you and show you how you can do both at the same time, how you can actually pay your home off faster and utilize your money to help make investments and make money for yourself. It's called interest arbitrage. How do we overcome this myth? So we're gonna look at what's called TIP, total interest paid. So let's just say, 2020 to 2022, you got a rate 4% or under. Let's say after that, you got a rate 5.5 to probably even 7.5. Although they probably called you to refinance and you started the process over, please stop doing that. At the very least, give us a call before you refinance again. It's the worst thing you can do. You start the clock over and you pay money. They say you're not paying money, but they put it on the back of your mortgage and you are paying for it. So TIP, if you look at page 4 or 5 of your closing documents, is not to say what your actual interest paid is on that loan. So even though your rate might say 3.74 or 4.9, it doesn't matter. What you need to know is what is the total interest paid on the life of the loan. So the amount of years, remember we talked about this before, the amount of time you pay interest, how many years you paid interest matters more than the rate. If the rate is higher but you pay less years, you're going to end up paying less total interest. Click back 15 seconds if you need to repeat that. But I want you to understand you can pay less interest if you have less time. We want to overcome this myth with some math. And the math we do this with every client. We take you through our proprietary calculator. We walk through top to bottom looking at your mortgage amount, what we think your appraised value is, what your income is, what your expenses are, your taxes, your insurance, your consumer debts, all these things. We plug it into our calculator and we look at the math. So I'm going to say this loud and clear. If your math doesn't work, I'm going to be the first to tell you, hey, I can't make this work for you. And I'm not going to try to manipulate it to make it work for you. We want to know that it's going to be not only a win, but it's going to take off 10 to 20, 25 years off your mortgage. So that's just something that we're going to do. But the difference is the TIP, when you look at a TIP on a mortgage, let's say the TIP normally is going to be, 60. I've seen 120. I've seen 150%. Go look at yours right now. Even if you have a 2.5, I bet you your TIP is 30, 50%, something like that you're actually paying on the loan. The TIP will come down if the math works with a first lien HELOC. So what I want you to see right here is stop delaying, take action. I know because I talk to people every day, and I also understand the fear that comes from just being a human, right? The fear of doing something different. There's many of you watching right now that know this actually sounds true. Like there's not any fabrication. This is logical. We're looking at math. And if the math works, maybe my wife and I should reach out, or my husband and I should reach out. I'm begging you, take that step. If you sit here and you keep delaying, then you're gonna be sitting here back in 2027 doing the same thing, 2028 doing the same thing. I had a client yesterday, literally, he's like, I learned about this a year ago, and now January 5th of this year, he's moved forward. It took him a year, which is, congrats. Proud of you for taking that leap of faith. But the difference is if you just stay there to take action and wait and keep delaying, all you're doing is pushing back the timeline of that financial freedom. You're pushing back that opportunity for you to be able to think differently. Because when you have access to capital and you start making more capital and have passive cash flow coming in because you're learning to operate as a bank, it changes the way you view all opportunities, the way you view money in general. So in order to do that, you must take action. I know that's maybe a little simple phrase, but I want you to understand, don't wait. I would recommend get on a call, see if it works for you, and start today. If you knew right now something I could give you could bless your family, would you be like, hey, I'm gonna pray about it for the rest of the week. Give me till the end of the month. There's no way. If you knew something would benefit you, why would you not start immediately? The only thing stopping you, and I'm just telling you from experience, it is fear. You're doing something not everyone does. But I think there's not a better place to be. I'm gonna choose the narrow road. I'm gonna choose the pathway of resistance. I don't care if there's resistance, if the goal at the very end is that much better or the reward is that much better. And that's something I know that we can do for you with our team. So all this boils down to control versus convenience. I think it's convenient for you to say, well, I got my 4.1% rate and I'm just paying my mortgage payment $2,300 every month, and I don't really think about it. That's a liability. That's something you're paying every month, and you're gaining equity over time, especially when you get past that 15-year mark, you start gaining equity, but you have zero control over it. But you're choosing the convenience of just having that fixed payment and not having to think about it. Let me ask you, would you rather have a fixed payment of $2,300 or a payment that's $1,900, $1,870, $1,825, $1,750? Like, nobody's the question. Everybody, I'm definitely going to take the one where it's moving down. It should be, because it should be based off of what you owe. That's not how it works. It's based off of the principal amount that you got into. So when you purchased the home, the only thing your rate is determining is that fixed payment. So I want to help you guys get out of that fixed payment and instead of worrying about convenience, let's start taking control over our time, over our balance, and not worrying about the rate. Let's look at the rate as a number that we're going to say, here's my rate, whether your rate is 6.25 or 7.5, and go, all right, if I loan this out to myself, can I make more than 6.25 or 7.5? That'd be called interest arbitrage. And now you're operating like a bank, which is fantastic. And I have partnerships and people who can help you with this. Or you look at things where there's an emergency and you need to loan out $20,000 to yourself for your daughter's wedding. Let's just say you loan that money out to yourself for the wedding. Where you're like, well, yeah, but now I'm paying interest on that loan. You're paying pennies on the dollar, but that $20,000 was working for you every day it sat on your HELOC. Whereas if you put that $20,000 on your mortgage, it works zero for you. You have the exact same house payment. It didn't go down. But let's use my daughter as an example now that I'm talking about it. So let's say she gets married in 12 years, 30 years. We'll say 30 years. Let's say she gets married in a long time. It's going to cost me $25,000. That $25,000 right now today is working on my HELOC. It's knocking down that daily accrued interest every day. So I'm saving money by just being stored there, as opposed to sitting in a savings account earning 0.7% or 1.2%, whatever it might be, doing nothing. It's not growing for me. My point in trying to reveal this to you is you have control with the HELOC, where if you put in the mortgage, the $25,000 in the mortgage, I can't pull it back out unless I do a cash out refi or sell the home. The main thing I want you to understand is there's this mortgage illusion, that as long as you have a low rate with a fixed payment for a fixed amount of time, that you're going to be okay. You know what? If that really is your goal, to have a mortgage for 30 years with this new thing that's being proposed, 50 years, you can do that. It makes me sick to my stomach to even think about it, but obviously you have control over your own funds. But if you qualify and you do have good cash flow, a high credit score, and good equity, I'm just telling you right now, you are literally throwing money away. You're literally throwing opportunity away. You're throwing freedom away, because once you're in this, there is so much more to this whole method than just paying your home off faster. I'm telling you from hundreds of clients of experience at this point that they're like, oh my gosh, I didn't realize I'd be able to do X, Y, Z. Didn't realize I'd be able to invest in this. I've gotten into Airbnb now. I got into real estate now. I got into investments. All these things that can take place because their mindset shifted. They took the leap of faith. They did something different. They got out of their death pledge and they got into what's called a first lien HELOC. And that's what our company does, is we educate you step by step on how you can use this strategy to bless and benefit your family. If any of this has been helpful to you, all I ask, will you simply take the time to like, comment below, share this with people. It really helps me as we're taking time to share value with you guys, to bless you guys, to educate you so that you can make the best decisions for you and your family. Also, if you go to the description, you can find a link where you can book a call with me or my team, and we would love to connect with you as soon as possible.